Okay, here we go. 3, 2, 1, live. Hey friends, welcome to Crypto Ernie and a special Sunday edition where we're going to talk about trading with Kraken. We're going to cover some of the basics of trading with Kraken, and that will include buying, selling, and closing positions. We'll also look at leverage using margin and what it means, how to figure it out, how to examine your position, understand just how much money is being used in your account. All of this is pretty simple, pretty elementary. Kraken is not what I would call a professional traders platform. Although I guess anybody, any professional or person with a lot of money or a little money can use Kraken just as easily. It doesn't mean that its performance is any worse or better. It really just means that it doesn't have all the different order types that you might expect in a more expanded professional platform. But it has enough. It has enough for you to be able to buy some Bitcoin or crypto or anything else, to then set a profit, set limit orders, market orders, and that's pretty much all you really need. Now, let's go over some of the basics of Kraken. What we'll do is, let's see, is there anything? All right, I don't have a huge amount of money in this particular account. Maybe about $4,500 or so, and we'll bring it over. Get rid of my head. So this is the Kraken trading area. We can look at the overview. You can see how much is in my account, how much of it is in Bitcoin, how much is in US dollar. Now, let me just say something about having things in Bitcoin or US dollar or some other stable coin. If we're trading Bitcoin, we know that Bitcoin is going to be far more volatile than the US dollar, so we're probably going to want to peg all of our trades on the US dollar. It doesn't mean that you have to. It just means that it's easier to keep track of where you are in terms of your profitability. If you have a stable coin that doesn't really move hardly at all, and then the thing that you want to trade that moves a whole lot, and particularly if that stable coin is the fiat money that you use in your everyday life, then it makes a whole lot of sense to kind of use that as your baseline. So what that means is that when you go into a Bitcoin trade, you want to come out into your personal fiat dollar, whether it's the US dollar or the euro or whatever. So after you make a trade, you can bring it back to US dollar. Otherwise, you could have made a lot of money in a trade because you were long on Bitcoin and it went up, and then you get out, maybe a small portion of it translates to the profit that you made in US dollar, but the rest of your account is still in Bitcoin. What happens if the price then goes down? You could potentially lose all of that gain that you thought you made. So as a general rule, I like to stay in US dollar. Now, right now, I just transferred over a bunch of Bitcoin, and I plan on moving everything over to the US dollar. It's pretty simple. I mean, I can just sell the Bitcoin into USD. I mean, that'd be the simplest way to do it. But let's take a look at this particular account. Tab. There are a few things that you want to take note of. We have the ability to create orders, and there are 3 different versions of it. There is simple, intermediate, and advanced. Intermediate is probably what you're going to need for most cases. If you're in simple, then you can also use this. I mean, it's not going to be that much more difficult to understand. Intermediate gives you the ability to be able to, well, I guess it really doesn't give you much more ability to do anything, to tell you the truth. But the simple one here is very simple. So let's talk about, first of all, well, one of the problems with simple is that you can't choose your margin. But simple would just be able to tell, that you want to commit this much to a trade. In most cases, we're going to want to use margin. And why is that? Because we want to be able to take and only use a portion of our account so that we can maybe perhaps put on multiple trades. By using margin, it will amplify or multiply the effect of how many dollars that you put or contribute to a particular trade. So let's say that you want to trade $1,000 worth of Bitcoin, which is about zero point 0.1 Bitcoin, and you have say a $4,000 account, but you don't want to take up and use 25% of your account. Maybe you only want to use a much smaller portion of that, maybe only 5% of your account, so that you'll have more money left over so that you can apply to other trades. Well, you could do 5 times leverage. It would take that $1,000, you do 5 times leverage, and now you divide that by 5, and you're actually using $200, and they are leveraging it up 5 times so that you're actually trading $1,000. So your 200 turns into 1,000 because you're in 5 times leverage. So that's kind of an advantage. You have to keep track of just how much money that you have leveraged out there too, though, because you don't want to be so leveraged, particularly in a very volatile market, that let's say that you have a $1,000 account and you're 5 times leverage, you're using $5,000 worth of Bitcoin, and then Bitcoin makes a big move and you could wipe out your account. I like to take very small trades. So let's take a look at what I have on right now. My positions. I have one trade on. It's a 5-to-1 leverage. It's using about 0.35 Bitcoin, or about $3,500. Now, 5 times leverage would mean that it would be $3,500 divided by 5 would be the actual amount of money in my account that is being allocated to this trade. So about $700. And we can look at it exactly by clicking on the order link here. All right. Why isn't it doing anything? Let's try reloading the page, see what happens here. Click on the order link. So, right, the margin cost right here, it's showing $728. So my $728 is acting like about $3,600 or 0.35 Bitcoin. I currently have a loss of 14 whole dollars. And I have trade fees of $5.40. So that trade has cost me that much. So you want to keep track of what your trade fees are, and that's kind of important. And generally, one way to keep your trade fees down is to not do market orders. You do market orders, and you're going to be applied commissions based on being a taker as opposed to a maker. You want to be a maker. Now, there's no guarantee that you'll be a maker. Makers have basically less commission associated with it. So what that means is that the type of trade that you take will generally have smaller commissions. Market trades will have the largest commissions. Limit orders will have the smallest commissions. In some cases, no commission at all, or no fee. So you should always be doing limit orders. But there's a caveat to that. When you do a limit order, you set a limit price, you're only going to get that price if your target asset moves to that price and beyond to take care of the spread. It has to get enough beyond it so that it can take the order. If it doesn't do that, there's no guarantee that the order will be filled. However, it'll get filled, whatever it does get filled, at that price. If you do a market order, it takes the price immediately, regardless of where you are, and it will give you the worst possible price based on the spread. You'll basically get chewed up by the spread, and you'll have a higher commission. Now, if it doesn't matter to you, you're anticipating a huge move and you just want to get in, then and make sure you get all of your money in the game, then you will do a market order. If you have some time to set it out and say, look, this is the price that I really want to get because I believe that I'm going to easily get it, price is going to move beyond it and fill it totally, then you'll do a limit order. Problem with the limit order is that there's no guarantee that you'll fill your entire position or fill your position at all. So those are the things that you have to weigh, first of all, between market order and limit order. Limit orders are cheaper. No guarantee that you'll get into position. Market orders are a lot more expensive. Total guarantee that you're going to get into the position. In most cases, you want to use a limit order. All right, so here's the position showing that I'm down now $14. It is a buy limit. Now, if I wanted to get out of this order, let's say I wanted to get out of that order. Let's just go to overview here. Back to positions. There we go. Sometimes you have to go back and forth to get everything that you want to see on the trading platform. I don't know why. But here's a quick way to get out of the order. I can simply get out by clicking close. All right, and so it automatically fills out how much that I have, and it put it at 5 times leverage. I think I could use any times leverage. It doesn't matter. And if I then sell this, now I'm not going to do it, but if I sell it, then I will get out of that order. Now, what will happen is because I'm down in that position, it's going to take part of the US dollars that I have and consume that, and also take some of my Bitcoin to settle this position. If I were up, if I had profit, then that order would be settled as US dollars, and those dollars would be then deposited into my account as US dollars. It would add to this total of $27.51, however, whatever my profit was. Now, to create an order, let's create an order right now. Let's see, where are we right now? We're at 10,360. So we'll purchase a little bit of Bitcoin. All right, so I'm going to click buy. I want to purchase 0.1 Bitcoin. I want to do it at 5 times leverage. I'm going to do it at a limit order, and I'm going to choose a price. Now it chose a price for me, 10,361.90, because that's about where it thinks that where the spread will allow me to almost immediately get into that order. But let's say I didn't want that. Let's say I wanted to wait for 10,360. I could do that. Let's click here. Now I have two-factor authentication, so I'll have to do the authentication here. All right, my order's been accepted. We go over to orders. You can see that here's my order. Now price is well above it at 10,366 right now. So it has to drop down. It'll have to drop down to probably anywhere from $1 to $20 spread, depending on the exchange and the time of day, the liquidity in the market, the volume in the market. But price would have to drop down a little bit for me to see that. We can take a look at the, here's the Kraken chart view. So I would probably have to drop down somewhere around there. All right, let's go back. If I want to cancel this order, I simply click the cancel. I don't touch anything else, because the next thing I have to do is I have to put in the password or the two-factor authentication. All right, and that should have that canceled the order. Now, if I want to sell, I could do a sell right now, but I'm not going to, only because that will take away from the position I'm currently in. And the position I'm currently in is a long position, a buy. So if I sell, it's going to take away some of that. But I could. I mean, I could get rid of 0.05, I guess, but I'm not going to do that just for the sake of extracting commission. It's pretty simple, though. I can go through the through it all. So I would say 0.05. I could use any leverage that I want. That'll determine just how much of my money I'm going to tie up. It's going to be a limit order. And let's say I want to sell at, I don't want to sell here. I want to sell at 405. All right, so I'm reasonably confident that that's not going to trigger anytime soon. So I'll just put that order in. Add my one-time password. All right, so the order is in. Now, if price goes up to 10,405, then I'm going to sell 0.05 of my Bitcoin order that's in there, and I'll only be left with 0.3 now. This is all pretty elementary. So there are other things that you could do. Let's say that you wanted to reverse your trade, and you're coming up to a price that you like, and then when it gets up there, you want to be able to then immediately go into a sell order. Then what you're going to want to do is cover at least the amount of money that you have in the long trade plus some more. So in this case, I have 0.35. So let's cancel this order first. Show you what I'm talking about. Let's say I wanted to reverse 0.35 Bitcoin if it hits a certain level. All right, so let me get out of this first. So I have a position open right now. It's 0.35, it's long. It's down a little bit, very, very little. But let's say that it reaches up to 10,700. And at 10,700, I want to go short with the same amount of Bitcoin. Then this is what I'll do. I'll create an order to sell. Here I'm going to do 0.7 Bitcoin at 5 times leverage. And I want to sell at, say, 600. Now, one other thing here, you should look, here's the expiry, good to cancel. This order will stay in effect until I get rid of it. If I wanted this order to only last for the session, then I would say good for this day only, or any other time period that I want. So this is particularly good for things like pattern casts, where we put out signals that are only good for the day. So you could set this up so it's only good for the day, and it will limit it to this particular session. Once the session's over, if it didn't get filled, it'll just throw the order away. So I'm going to put it on good for this day only, just in case I forget about it. I don't actually want to do it. I'd rather wait. But anyways, there we go. And I'm going to sell if it hits that price. So I have to add my two-factor. All right. So now I have an order at 10,600 to sell 0.7 Bitcoin. That will result in a short of 0.35 Bitcoin because I already have long 0.35 Bitcoin. So there's an easy way to reverse a trade simply by doubling the amount that you currently have. All right, I think I've beat this horse enough. And if you have any questions, please put them down in the comments below. I'll make sure I read every single one of them and answer your questions. Thank you very much, and we'll see you next time. I should put my face up here and say goodbye. See you later. Please give this video a thumbs up and subscribe if you aren't already subscribed. And we'll see you tomorrow. Bye.